Hi everyone, welcome to today's Altcoin Bible. Remember, if you want to watch the full version of this episode where I go into the current state of the Bitcoin market, some of my thoughts around altcoins versus Bitcoin, make sure to become a newsletter subscriber by clicking the link below, and you can get access to these weekly sessions, which are a bit more extended, and I give you a bit more of a mastermind flavor. The longer extended versions, nuanced, that I do with the Elite Mastermind. So let's crack into the Altcoin Bible. XRP is my cherry ripe for today. It is simply still one of the best charts out there, and there are very few charts right now that look good, not only against USD, but also against Bitcoin. And I'm just focusing hyper dialed in on what is the best looking chart right now. So XRP, we can just see just broadly, like think about it at a very high level. XRP is in a very clear uptrend, burst up 500%. Sideways consolidation, very little downwards momentum. It's brought up very, very quickly. Breakout up into this new section, shorter, smaller compression. So it's getting more aggressive and it's pushing higher, which tells me that we're starting to get into the not the final legs, but we're approaching some kind of exhaustion point once it makes this next move. We're either going to consolidate again and top out, or we're going to consolidate again and blast higher. But with XRP here, super not easy, but just the analysis of how you would approach this from my view just seems very simple in my mind. It's so close to breaking out of this wedge formation, and you can draw this many ways, but I think that's what I've had, so I'm just going to go with it. But XRP very clearly breaking out of this downtrend here. It's trying to, at least. It's on top of the 10 EMA, that blue line there. It's on top of the 20, which is nice. I don't trust these types of moves in markets. It gives me a little bit of a directional idea to start paying attention from the downtrend break. What I ideally want to see is this level here above, flipped from resistance, so the all-time high, I guess the bodies of the candle flipped from resistance into support, and you can get aggressive on top of that level. That's where I'd get very aggressive with XRP. That said, you could also make the same argument, take on a bit of a risk once it's above the bodies of these candles, because there's really not much above it after that. There's no real volume that's stopping the move higher. Now, in terms of entry points, generally when these downtrends break, this is why it's only sort of one part of the puzzle, is once it breaks, it generally runs into resistance above, fakes everyone out, and all those late longers that just want to ride the derivative move on 10 and 20x and make a quick million, they get rinsed. So this generally comes back and retests some kind of consequential level back on the breakout. So that's where I'd be looking. I'd also be looking down to the 20 SMA, the green line here. So 2.9, 2.8, not too much further down than that. If it starts to break this level, then structure might actually start to be turning, and we could be coming down to this kind of region. And that's when you can whip out your Fibonacci retracements, which we covered in the course, and you can go through that. Okay, and also, sometimes I forget about the target. So if XRP were to break out from here, a simple Fibonacci extension is just in this box here, and I think $4 is actually probably a good short-term target, even though it's maybe not a strong Fibonacci extension. It's kind of the first, but the next ones are really strong. But $4 is a nice whole even numbers, really trip people up, and investors and traders always have sell orders in those types of regions. So I would expect some kind of resistance at 4, huge resistance at 4.5, because the overlay of a couple of Fibonacci's, also from a larger Fib extension that I'll show you in a sec. 4.7, then 5, that's a huge level. And as this keeps going higher, guys, you just have to remember in the back of your mind the fundamental analysis of the market cap. XRP's market cap is going to get quite large and potentially overvalued when we start to reach those levels, because that would almost be a double of the current market cap, because price has doubled. So you just have to think about that. So whenever someone says XRP is going to $100, you just have to take a cold shower and just think about what that would mean in terms of the capital needed to roll into XRP to push it that high. It's just astronomical stuff. But if we were to zoom out, the Fibonacci extension I drew before, from the low of the 500% move to the high, I draw it back, and then this is the larger Fibonacci extension. So this would be kind of the stretch goal, longer term investor, where would I take profit here? And I think XRP, sort of can overlay with the shorter term Fib extension. And if you see any overlap levels like 4.5, potentially the $5 level through that region, I think that's really solid. If XRP just takes off, it gets everything fundamental that you want to happen from it becomes a strategic reserve, all this kind of stuff. These kind of levels then become in vogue. 5.6, 6, 6.5, 7, those type of levels are all in, but they're stretch goals. I think, that's where you have your strategy to, take profit off the table as you go, but always leave sort of a amount in there and base this a lot of on momentum as well. Whether it can keep going, does it still have room? Does it still have strength? You can leave a little bit in it to run and go from there. All right, my one to watch, and it could very well be a cherry ripe today, is Solana. So similar dynamics. Solana broke out of this downward wedge correction. You can see they very visibly broke up. So it's more advanced than XRP right now, which is interesting. And now it's had its pullback. It's trying to come back down a little bit further to test the breach. The 20 SMA here is a really interesting level, which I think is a great buy. But ultimately, I think the smart play is to wait for either a flip of that level and then a flip of that level to get, hyper aggressive. But if you're buying the downside here, I think this area in here is very interesting with the 100 and the 50 moving averages sort of on top of each other. And also a bit of a wick to scare everyone out before a bounce. I could absolutely see that. I love though right now that there is a sort of a support level on the RSI being retested, and that's the 50, and it's holding above. Stochastic RSI is coming down and should reset, in the next few days, I would think, for maybe a push higher. Solana BTC is also a pretty strong chart, so that as well leads me to think this is a definite chart to watch, and the dips here are to be bought, for a potential squeeze up. So don't mind that at all. So buy levels would be anywhere under 225. You can think about that quite easily. Anything under 225, you get interested down to 210, and just buy that up. That's what I would be doing. It's not financial advice, but it's absolutely something I would be doing. And in terms of the targets, Fibonacci extension could give us a little bit of an idea here. So I'm going to go from the low to the high up there. I think 310, yeah. So psychological levels again are really important. So 300, 310, that kind of region's useful. 352, 370, and then the golden level of 400. Look, any higher than that, and I think Solana does get higher than that, then you kind of have to wait for another compression, I think, and then do the same thing that we're doing here, the same sort of analysis before it goes higher. But stretch goals can be much higher, and you can do maybe a weekly Fibonacci extension analysis on the Solana, but don't mind that at all. Okay, now that's not the chart I wanted. I just clicked off it. The danger zone for this week is Dogecoin. So memes are just not in vogue right now. There's just way too many memes out there, way too many tokens out there. There's not enough capital to go around, and a bit of the Doge narrative has worn off. Although we did see this morning that an ETF submission came through for Dogecoin. So look, I think Dogecoin is probably going to do better than most going forward. However, the chart is telling me that it's breaking down from this large pattern. You can see here very clearly. Also the low here, the support level has broken and it's gotten beneath the 100 moving average here. I'm suspecting that this is going to potentially rally back into the moving average and the underside pattern support, and then it's going to roll over. And I think the 200-day moving average down here is a great zone to get interested again. And if I was just to roll up a simple Fibonacci extension from this start of the impulse to the high there, I think the 0.618 at 27 cents is a great buy. Also down here, the confluent indicators of the 200-day moving average and the 0.786 down at about 22.5. That seems like a lot of, in fact, that is, I think, a great area to buy in my view. Upside, we'll have to check that when these levels start to get tagged, but I think you can look on the reverse as well on the way back up. 35 cents. 40 cents, and the mean level of $1 is probably the longer term stretch goal for Dogecoin. But again, I'd be waiting for strength to be seen versus Bitcoin. With some of these cryptos bottoming out, there is a thought here that maybe they need to go all the way back down and bottom out on the RSI on the daily. Or we could just be seeing a higher low on the RSI before the next big pump. There are some other cryptos that are looking like they want to go, into those really oversold territories where you're going to find some value. But you know what, this looks pretty good here for at least to see that rally back into support, which could be now resistance. So yeah, I'll have to play that by ear, but that's my high-level read of the three charts, guys. Hope you enjoyed this, and we will catch you again soon for our next video. Have a great day. Bye-bye.